So we may very well be looking at a new set of cooling measures whereby IRAS says, hey, you can no longer buy your property in 99 to 1 structure. What's going on is a very big hoo-ha in the property circles. For you to understand what's going on, I need to explain to you some terms. And the first term I need to explain to you is joint tenancy. What you need to know is basically, or rather what most people know is when you buy your property with your spouse, both of you own the property together. And that's it, that is joint tenancy. Another structure that you can buy your property, if you don't already know, is tenancy in common. That means you can own 60-40 with your wife. For example, a better example would be if you're buying with your parents putting in 60% more CPF than you, for example. And so they own 60, you own 40, things like that. Now, this is a very common structure in today's market. In fact, I myself bought my property in this 99 to 1 structure. My past 2 properties I bought in this manner because, and I own just 1%. My wife owns 99%. Because let's say 3, 4, 5, 6, 7 years down the road when I have enough savings for a second property in Singapore, right? It's a Singaporean dream, right? To get 2 properties and all that, right? After saving up enough, I want to buy my second property, but it's going to be my second property. I have to pay 17% extra tax on top of what the normal taxes are already. It's a lot of money. Now, what can be done is, because I own just 1% today, down the road I can tell my wife, hey, buy over my share of the property, so she will have 100% share and I will have 0% share. My next property that I buy, okay, I will not have to pay extra buyer stamp duty, additional buyer stamp duty. I don't have to pay. I just pay the normal buyer stamp duty. Okay, so that's how people make use of 99-1 structure to plan long term. What's going on in the market is when example. These are my friends, Marcus and Shirley. They're siblings. Now, Marcus wants to buy his first property. He got no property yet. He's going to be buying his first property. He don't have to pay ABSD. He pays a normal 4% or 3% taxes. Shirley, on the other hand, sister, is buying her second property because she already has one home with the spouse. But Marcus got no income. Shirley is the one with the income and she wants to support Marcus in the purchase. Alright? They want to buy together lah. The problem is, when Shirley's name goes in the property, they will have to pay 17% tax because of Shirley's first property. Alright? Now, what's going on here is a questionable process whereby Marcus goes to a developer, buys a property, and then, for example, 1.5 mil. He pays the 4% tax. And here's the key. Before the transaction completes, he subsales 1% of his share to Shirley so that Shirley's name can come in and clear the loan and all that. Now, Shirley now owns 15,000 worth of property and she has to pay 17% on that 15,000 because that's a 1% share. 17% of 15,000 is basically $2,550. Okay? They complete the purchase. IRAS says that, hey, Marcus paid the tax, Shirley paid the tax based on her share, all is good. But these are the people who are being probed by IRAS because they are using a loophole to avoid paying tax. Why is that an issue? Because there is this thing called general anti-avoidance provision by IRAS, okay? All it means is IRAS does not want you to blatantly avoid tax. And what these siblings did, they just avoided paying 250,000 in tax. That's 250,000 in revenue for our nation to build more ERP gantries, to pay GST vouchers, to do whatever they want to do. In any case, all of us pay taxes fairly. But in this scenario, it's questionable because they may have used this structure to avoid paying tax. Okay? However, there's a real application here whereby Marcus can't afford to buy that property. He has the savings. Maybe parents passed away, he has the inheritance, he has the savings to buy a property, but he doesn't have enough income, just started working, for example. But Shirley is the one that can come in and help. Now that's real world application where I feel, got fight lah, it's fair. They're not trying to avoid tax, they just want to help each other and all that. But in reality, what's going on is wealthy parents are using their children who have no property, no income and all that, just to make use of their name, to grow their family's wealth, to grow their own wealth sometimes, you know, they never share with the children. And then, yeah, so these are the people trying to grow their wealth unfairly without paying the due taxes, you know. You know what I mean? So that's why it's being probed lah. These are the people who are being probed. It's not a good thing. You're avoiding tax. I pay my tax in full every year, you know. Yeah lah, no, I pay tax. Okay, so again, the other implications would be people who bought 99-to-1 structure, joint tenancy in common, outright. Like myself, I believe nothing to hide, no issues here. Paid my taxes all in full. So if IRAS comes in, and ask for interview and all that, I'll update everyone. But I believe a lot of people buy in this structure for long-term planning, and I think we're all fine. All right. The other implication would be the law firms who actually assisted the buyers who bought in this structure. Okay, I think they will be implicated. Don't know what's going to happen to these law firms. I know not all law firms does this, only a few. Okay. Now, as I mentioned at the start, you know, maybe you got new cooling measure whereby IRAS says cannot buy in this structure anymore. I don't think it'll go to that extent, because all IRAS needs to do is, instead of collecting the stamp duty during exercise is like 10 weeks away from completion, you know. They straight away want to take the tax already. Hey, relax lah, bro, you know. Wait until closer to completion, like a few weeks before completion, then collect the stamp duty lah. Why you so rush? You know, not going to run away. You just block us from completing the purchase if you don't pay lah. You know, and by doing that, they can avoid all this loophole, all this, you know, and they can just tax based on the final holding structure. That's it. Now, like I said, it's a big hoo-ha in the property circles, but I don't believe the market will shake because not many of our clients. They are aware. I mean, we've shared with them and all that, but not many people actually want to go through the hassle of potentially being probed by IRAS moving forward. Maybe back then we don't know. But yeah, again, like I said, I think a very small percentage of home buyers buy in this manner. Bad actors mostly. But otherwise, yeah, basically that's it. That is what's going on with this 99-to-1 hoo-ha. I hope my explanation has helped you guys understand and to understand why it exists, and also to understand how it can really help and also how it's being abused. If you want to learn how you can use 99-1 structure to your advantage, let me know. I've done it a few times for my clients as well, for myself also. Otherwise, I'll see you guys in the next video. Thank you. Don't forget to follow and like my video and comment, please. All right. Thank you. Bye-bye.